Hey everyone, one of the coaches of Unga Academy here, and today we're going to be talking about how to build a trading system based on the recurring behaviors in the Platinum future. First of all, we're going to analyze the intraday price movements that characterize this instrument, and then we're going to explore the best strategies to be successful, at least from a statistical standpoint on this market. Before we start though, please remember to subscribe to our channel if you haven't already done so, and also click on that notification bell and please leave us a like. Hi, we are the Unga Academy, and we teach traders how to make money in the markets. Our founder, Andrea Unga, had been struggling with trading for years until he developed his automated trading method, which he used to become the only 4-time world trading champion. Subscribe to our channel for free tips and tricks. Okay, so platinum. It's one of the most traded precious metals at the CME, along with gold, silver, and palladium. With the help of our proprietary software, which you can see on the screen, we can plot the average trend of the price of this raw material and try to understand what are and what can be the best times to open the positions on this market. So let's take a look at the intraday average behavior of this instrument. If we plot the average way in which prices move during a standard trading day, we can see that there's a bearish trend in the morning between 4 a.m. and 9 a.m. Now this trend is quite evident, and more importantly, it's also quite consistent. Moreover, this bias, this recurring behavior, seems to track the trends of the gold future pretty well. In fact, on average, there's a drop in the prices of gold around the same hours. So what we can do now is to start from the information provided by this chart and use it to build a strategy that trades the platinum future only on the short side. Now, the script we'll build will be very simple, just like the ones we've seen in our previous videos. The entry and exit times will be precisely at 4 a.m. and 9 a.m. But let's write our strategy. Let's start from the short entry conditions. So let's write, if T equals 400, then sell short next bar market. And then the second line of code, if T equals 900, then buy to cover next bar market. We don't write only buy, because in this case we only want to close the short positions, while if we wrote buy, we would not only have closed the short positions, but also opened another long position. Okay, so let's stop here and compile the strategy and see what the performance report tells us. First of all, we can see that the equity line is rising, and it has a pretty good average trade of about a little over $30. We've got a lot of trades, about one a day, so we have a total of about 3,000 trades. Let's also check out how much the strategy would have earned trading it with a single contract. It's around $94,000, and if we also look at the yearly performance of the strategy, we see that there are only 2 years in the red. Now, in today's video, we don't just focus on finding the best times to trade, but we also want to identify a possible entry setup that can be effective. In one of our tests, we focused on checking out the strategy's performance if we go short only when there's a decrease in the price compared to the previous session. That is, if the close of the current session is lower than the close of the previous session. So let's see how we can code this new condition. If the time is equal to the 4 and closes 1, which stands for the close of the session that has just ended, is less than the closes 2, which is the close of the previous session, then the short position will be opened. No condition is needed for the buy to cover instruction, since it simply tells the machine to close the open trade. So we open a position only if this condition is met. We compile our strategy, which in this case will obviously make less than 3,000 trades. If you remember before, we had a profit of about $94,000. Now we're earning slightly less than $90,000. But as I told you, the number of trades has been reduced by half. We make the same amount of money, but we've reduced the number of trades by 50%, which means that we have doubled the average trade with this single condition. So as you can see, increasing the average trade is not that difficult and can undoubtedly improve the performance of this bias strategy. So let's go check out the equity line. Now, please don't pay attention to the abnormal spike that took place around March 2020, because as you know, we shouldn't consider this trade since the market was very volatile in that period, and this could lead to data errors. However, the equity line has clearly improved a lot. Now, for curiosity's sake, let's also look at the annual period analysis. As you can see, with the condition we added, all the years are now in gain. Of course, this is just a small sample of what we do at Ungar Academy. Stop loss, take profit, and maybe some other conditions should be added to increase the average trade even more and make the strategy useful in real trading. If you want to learn more about the world of systematic trading and how to build these automated strategies, I invite you to check out our free webinar. You can find the link in the description of this video. And in this webinar, Andrea Ungar, the only 4-time world trading champion with real money, explains step by step how to approach systematic trading. Finally, if you haven't done it yet, I invite you to please go and subscribe to our channel, leave us a like, and click on that notification bell to stay updated on the release of all our new videos. Also, please, if there are any topics that you would like to be discussed in our next videos, please write them down in the comments. Thank you so much for watching this video, and we really hope that it has helped you. We'll see you soon. Bye-bye.